to this session with the team from very early. We're going to be diving into Web3 in 23 and going to ask the question, where are we headed and how to capture it? But I am sure quite a few of you might be thinking, why these guys? Why are we talking to Dennis, Matthew, and Jan? I just want to voice from our side that we've been looking for some time in the Web3 space and been looking for the VC that we think is doing the let's call it the strategy in Web3 that is not hype driven, but is built more on fundamentals and who are truly native to the ecosystem. And one of the funds that we are the most hyped about is the very early team. And for that reason, we've thought, why don't we bring Jan and Dennis and Matthew on to have a conversation with us about what's happening in Web3. And let me just switch to the next slide here, so you can all see the credentials of the team. And Matthew, I'll call on you because you're in the middle there, and that's always the beautiful guy who's there. So let's put you on feature. Tell us a bit about tell us a bit about yourself, and then I'll kick it to Jan and Dennis afterwards.
Sure. Pressure is on. Hello, everyone. I'm Matthew. I was super lucky to get into this space just by starting a PhD at ETH. So in the beginning of 16, I started my PhD there. The topic was to look at blockchain technology and how this can be leveraged in traditional distributed systems, which I did. And then that was a couple of months before the big hype started with the ICO craze in 17, 18. So during that time, I did some tech DD for traditional venture funds like Lakestar here in Zurich. And then that's where I am based and Denis is based and where we originated this fund. And then later I did a year in New York at Columbia University, and I worked for North Zone there doing similar stuff. So those are two big VC funds, traditional funds, which are also active in Web3. I then, after the PhD, joined MakerDAO as a product manager and led a spin-off there. It failed. We killed it. I went on as a product manager to Zello, built our liquid staking protocol, a couple of K users, a bit over 1 million TVL. And then we founded the fund together. And basically, we all know each other from that same background, from the PhD times at ETH.
Super cool, Matthew. Thank you. Jan, Dennis, feel free. Who wants to go first? As we joked about in our recording for the podcast, being Web3 native means that you're all super nerdy. So maybe I should force one of you to go directly into it. Jan, will you take it?
Sure. So my background most recently has been in token design. So I spent the last 2 years at Outlier Ventures, which is the largest Web3 accelerators, and have worked with over 100 different teams designing their tokens. And we'll get a bit more into what that means exactly. But that was the kind of most hands-on Web3 experience. Before that, I was a founder myself and spent some time at Google and at Early Bird VC. And I actually met Matthew writing my thesis on clustering crypto applications back in 2016, 17. He was advising that at the time. So that's how we met, and also been in the space for similar amount of time.
Awesome. Dennis, take it from here.
Whoa, great. Hello, everyone. Unlike the other two, I'm not Swiss, but I happen to live in Switzerland. My name is Denis. I moved here like 8 years ago, almost 9 years ago, to do my PhD. That's, as Mathieu mentioned, how we met each other. So I was at ETH Zurich too. I wasn't really directly researching Web3 topics. I was more doing machine learning work, data science, machine learning. Worked as a machine learning engineer and data scientist for a few years, but through the university PhD, I got involved with these Web3 topics, have been mingling there and doing quite a lot of work, and then came together with the other two and decided to launch this early stage venture fund where we basically do what we kind of have been doing individually the past years, but like institutionalizing and investing in private and public Web3 assets.
Yeah, and I think to our audience, and we're going to talk more about this later, because of course we're going to be talking about, how do you invest in Web3? How do you capture the opportunity that's there? And I just want to add a meta comment to everyone listening in. What you're looking at is the GP team of a venture fund. So what you can really understand from that as well is that there are different nuances, different parts to a venture fund that invest in this space. And we've got a token design, we've got a more trader background, so you can see how you need to be able to oftentimes to really be good in this space to be able to cover quite some different skill sets. And it's stuff that we're going to be talking about later on, but I just wanted to call that out here. What you're also seeing, of course, is that it's a team that's crypto native, as we call it, and that's also something that in this space is absolutely crucial, because if you're not okay, this is me from an outside, right? I'd say if you're not accepted by the community, then it's going to be very difficult for you to get into the best deals at the very earliest stages. But I love, Matthew, you laughed a bit there, so I'd love to ask you, do you agree with me when I say that?
Yeah, I 100% agree. I think like it's a curse and a blessing at the same time that we are, crypto natives and very well connected in that space, which also means we are a bit less connected in the old and traditional world, right? So for example, when fundraising, right, if you look at our LP base, so the investors that we have, like 90% of the capital that is in the fund are nerds just like us who've spent years in crypto, like, 5 years plus, founders of crypto startups or fund of funds that have been investing in crypto since 2016, right, before the hype. And that is great on the one side, because it also helps us to get deals, to understand the ecosystem, to build communities, and to bring people together, right? It's an additional selling point when we want to get into a real hot deal. We can say, look at who's backing us. Like, you will get to meet these people. And actually, we already have formed first collaborations of certain protocol founders who have backed us and portfolio companies in which we invested. But obviously, there's also a disadvantage, like everywhere, right? The problem is we are very much focused on that one scene. And, when crypto founders don't have a lot of capital, like when everything drops in price, it is hard to get access to more money. And we are not as connected in like traditional, family office circles, etc., for fundraising.
Which always is a nice thing to be when you're trying to raise a venture fund. Nonetheless, you've managed to make quite a dent in the universe anyway. So congrats on that, guys. Let's get into Web3 and the state of where we're at, because I have to say, I think many in our audience will be thinking, Web3, isn't that super 2021? Maybe beginning 2022. Right now, everyone's talking about generative AI, and Web3 has almost fallen off the ground as from all of us just following usual tech media. Jan, would you take us into your view on this? Because I think it's an important point, and I've brought some slides as well to emphasize. These slides, Jan, so feel free to tell me if I should flick one of them on.
Yeah, let's dive into the first one in just a bit, but maybe in general, yes, Web3 might have been super 2021, but it has also been 2017 and 2013 and hopefully 2025, or not that I want to have specific time predictions here, but the general point is it works in waves of adoption and hype, frankly, right? And then why is there more hype? I think also same with AI, right? There've been hype cycles. But they tend to be a bit longer. In crypto, everything is accelerated because also these assets, the tokens, they become liquid much earlier. So that kind of adds to the reflexivity of these markets. So it means it does work a bit like a roller coaster. And then, there's parts where it all just goes up like crazy. But then also on the downside, we see that correction. But that's just what's happening on the price level, right? And that's what tends to drive the attention around it and kind of whether on social media or generally. However, what's happening kind of in the background is very different, right? So while right now it might seem, from just looking at prices and the media attention Web3 is getting, it might seem like not much is happening. But if we look at what's happening kind of on the ground with builders and new technology and innovation, there's a much different picture that emerges. So kind of first here, let's just zoom out, right? And think, why do we even call it Web3? We call it Web3 because we think because it is the next layer of the internet. So kind of what Web2 was with social media and video and so on. Now we're adding this monetary contract value layer on top of it. And so, if we compare kind of what the adoption of the internet or Web2 with Web3, you can see here there's still a huge potential in terms of growth of users. We're still very early in terms of the whole life cycle of Web3. And of course, it moves up and down in hype cycles kind of within that. But if we zoom out, we're still very early.
Yeah, I just got a text message from a guy asking about that. Why is it that the cycles are so much shorter in Web3?
Yeah, I do think so. We're speculating here, but I think one of the main drivers is that a lot of these networks, in order to work, they need a token or some sort of asset that is tradable, and that is tradable much earlier than a traditional startup would go. They would only be tradable once they do an IPO and are listed on the stock market, and that's super late stage. However, here, like, everything gets listed and liquid like much earlier, and that means it's kind of subject to these speculation cycles, and they tend to reinforce each other. So at the time where prices are all going up across the board, like, everybody wants to suddenly get in, whether they understand what's going on or not. It's kind of, that's how the hype then builds. And that's, that's why I think it's more extreme here than in other markets.
I think like the monetary, side of things and how quickly you see valuations of startup change and so on, that is one side. I think another side is, purely the technological side. So what we really like and what makes us fundamentally bullish on Web3, on blockchains, is the openness of the system, right? Maybe in the very beginning of the internet, it was also very open, but then the more this developed, right, the closer and the more silos everything became, and we kind of lost the composability of web applications over time, right? And what we have in Web3 is basically predefined composability. If you launch a smart contract on a blockchain, everybody can use it, right? If you launch an exchange on a blockchain, you're not like NASDAQ and only banks can trade with you and they need to be onboarded and so on. Like, anybody with access to a blockchain can trade on your venue. You cannot prohibit anybody to trade. And that also means that somebody can build an application in which they use your exchange, right? And like, there are many examples in Web2 how the silos killed innovation. For example, Candy Crush Saga and so on, all these games which were on Facebook, billion-dollar businesses, and then Facebook decided, well, we don't want our users to play games anymore, so we kill these guys from the feed. Boom, business gone, or heavily reduced. And that can't happen in crypto. And I think that is an important aspect of why innovation results in more applications faster. And that's why hype cycles also become faster, right? It takes less time until we see the new interesting thing.
Yeah.
Maybe
I've always...
before you jump into the next question, just a quick example, just because a few weeks ago we all were able to watch, like, in real time, these TradFi bank runs, right? And we were reminded how fast things can go nowadays with, like, I don't know, Silicon Valley Bank and online banking today, and you're able to withdraw or wire money within instances from at home. And the last time we had bank runs, everyone still had to go to a physical bank office, right? And that's basically the case to the extreme in our Web3 industry. We like constantly have this amplified bank run situation because you can do whatever you want in an instant.
Yeah. So let me just ask the pros and cons there. Do you believe that it's fundamentally just a purely good thing? Because it's definitely what we saw with Silicon Valley Bank. Not entirely great how easy it was to to initiate a bank run.
I don't think it matters so much whether it's a good or a bad thing. I think it has good and negative sides. I do think it can be addressed, like the sheer programmability and openness will at some point also give you the opportunity to make certain things more sticky, which we already have right now. There's like protocols that have things like that enforced. And it doesn't matter so much on a normative scale whether it's good or bad. I think it has both sides. I think we'll find solutions in both directions. The direction where you use this volatility, but also B, where you like flatten it and make sure that things get more stickier.
Interesting. But that was us getting sidetracked, because we should get back to what is it we're seeing on the adoption space of Web3, because I don't think necessarily that everyone listening in have been convinced yet that Web3 hasn't actually gone down in activity. So guys, would you tell me a bit about what we're seeing on this slide and why you think that's meaningful to bring up in this context?
Yeah, so we're just picking out a few metrics that, from 2021 to 2022 did not decrease at all, but on the opposite side, really went up. So if we're looking at other things rather than price, we see, for instance, that, like the Christie's, this is just one data point, but they had like 100 million in NFT sales. And in general, like the amount of NFT holders, they went up 27x from 2021 to 2022. So we think like really we can see kind of on the cultural side, NFTs really start to catch on, and not just the profile pictures, but there's many different applications that we see. So it's kind of important not to reduce these things to their kind of most hyped and maybe initial use case. I think they're much more important primitives.
And to everyone thinking that's a cliffhanger, yes, it is, but it's a cliffhanger that we will pick up on later. But yes, awesome. Jan, continue.
Yep, I think we can also see it with enterprise adoption. Like, every cycle there's been some early experiments, and I think like now it's clear to many big enterprises that Web3 is here to stay, and they experiment kind of more aggressively. For instance, Siemens issued a 60 million bond on Web3. So that's a kind of cool, like use case. And there are many others. There's still many corporates developing their own blockchain-based infrastructure and so on. And in total, like the kind of real world assets on Web3, that's another big trend that just started to pick up in the last year or so, went up by 22x from 2021 to 2022. So this all like happened after the kind of bull market and crash. We're seeing this big adoption in real world assets. And then last but not least, like a lot of developers are joining kind of the big, are leaving the big tech corporations and joining Web3. So that's kind of the active numbers of developers doubled in just the last year. And I think in general, we're at more developers than ever, more activity than ever in terms of the downloads of the tooling, and actually most of the developers just joined this past year. So when we're looking at that as a kind of leading indicator, there's more people building and more stuff being built than ever before.
Yeah. Dennis, were you about to add anything?
You can read my mind. Yeah, I'm thinking about the talent and maybe. Yeah, I want to generalize point 3 more towards talent, and that might be developer, right? So we have the FANGs and the technical people, and I think we usually have the chart where we say active developers like doubled in the last year. So really growing fast, but at the same time, talent is also more like business executives, the business development people, and I was basically thinking of some of the media outlets in our Web3 industry, and how I was like shocked or like positively shocked the last time I listened to an interview, and that was with the head of DeFi of Moody's. Like Moody's, I mean, you can think what credit rating agencies, you can think of them whatever you like. Like you might love them, you might hate them. I don't care, but they exist. They do a purpose. They generate a lot of revenue. They make money, and they have a head of DeFi. Like what?
Yeah. No, but I think that these points are important to make, right? Because I think that we come from a period where everyone cared about Web3, and now we're in a period where everyone should care about Web3, but they're not, right? And I think that's the important part. And I think that the people we have listening in here today with us are in the profile where these are the exciting people to have around the Web3 space, because and it's also something we've spoken about many times, right? That we've had so many tourists in Web3. So even though your deal flow as VC fund managers was much bigger in sheer volume the past years than now, you're no longer sifting through all the bullshit, right? And same thing, the clutter that we were used to having around this space is actually gone. So, and much of it is only for the better, right? So I just want to point that out. That said, we're in a bear market. All of us are seeing it across the board in all VC sectors. So I would just love to ask you guys, explain to me exactly how you see that relate to the Web3 space.
Yeah, so we've touched on it briefly before, that there is this increased cyclicity in Web3, of like, and you can see the roller coaster just on this chart. However, like what has often been the case in the past, and what we see this bear market as well, is that a lot of new technology is getting built in, just like you said, Andreas, before, now the kind of tourists and the hype is gone, and people who are committed, they're really focused on building the next wave of innovation and technology. So we saw this in the last cycle. For instance, a lot of these layer 2s that are now, some of you at least must have seen Arbitrum that did a big token airdrop recently, and there's a lot of activity there. Just like the other L2s, like Optimism, Starkware, Polygon, and also alternative layer 1, so competitors to Ethereum, like Solana, like all of that was built in the last bear market, before the big hype. And then during the bull market, in the hype period, these things tend to come to fruition and really get the attention, because then people all of a sudden are looking, okay, what happened since last time we looked at this? And so similar here, we're seeing now a whole new wave of technology and interesting applications being built out. And we think in the next bull market, basically, we'll reap the benefits. But it's, from an investment perspective, it's much more interesting to get in now, while nobody cares, basically, and while the stuff is getting built.
Yeah. I'm curious, when you look, and are you seeing the same activity in the VC interest? So the VC funds that started coming more into Web3 in the last couple of years, have they stayed in, or have you seen actually also pull back from what you might term as the more professional investors?
So I think especially in Web3, it just makes sense to be specialized on it, because it's such a different world. There's so many things to understand. So I think the funds that have been specialized on Web3 all along, like they're still here, they're deploying, and they're having a great time right now with the valuations low. A lot of the traditional VCs who dipped their toes into Web3 right at the peak, they obviously got burned, because or a lot of them at least, because they invested right when the valuations were highest. It was peak hype, and now they're kind of gone again, because they had to explain like what they were doing last time around, and they can't sell it as easily now. So that's at least what we've been seeing to some degree.
Yeah. Awesome. So guys, I will take us now into the investment thesis segment because, yeah, and to our audience, this is of course one take on Web3. Could be, hundreds of different investment theses. So it's not to say that this is better than anything else necessarily, but it's the expression of what an investment thesis for a fund focused on Web3 specifically could look like. I'll just pull it up here first for us to get an overview, and then afterwards we'll dive into first decentralized infrastructure, then real world impact, and then public markets opportunity. And I'll let whoever of you wants to introduce us to this slide here, take us off and tell us why do you break it down as you do here.
Sure, I can give a quick overview. I think each of these theses comes from some experience of ourselves, like what we experienced with investing personally and in what areas of crypto we worked, and also fundamental beliefs of why we think this whole space is valuable and relevant. So decentralized infrastructure is essentially about the composability that we already chatted about before, right? We believe the fundamental advantage of blockchain is its composability and its inherent moneyness, and that comes with decentralization. Then the real world impact is another core belief which we have, that blockchain technology has, tremendous potential impact. It is a great technology, but the connection to the real world, to true economic growth, so far is still limited, right? The amount and types of users so far are very limited. So we think that there is a lot of growth lying ahead in getting new types of users onto blockchains, and that's what we focus on there. And then finally, public markets. Again, we've seen me working at these traditional venture funds, right? Lakestar, North Zone, and others. As crypto natives, we've seen that tokens behave very differently than stocks, and you cannot compare them one-to-one. A lot of investors make the error of doing that, and they miss out on opportunity, and that's why we want to have that in. So that's a very short overview before we dive into each of these.
Then let's dive more into decentralized infrastructure. Tell us exactly what do you mean by that? Give us your thesis within decentralized infrastructure, and then what are the value drivers there?
Sure. So what do we mean by that? Or first of all, why is this even important, right? Again, the composability we've talked about is super important because it enables different applications to work together seamlessly and predictably, right? It is guaranteed, if you rely on a smart contract which is on chain, that you will have access to that for years to come. And that the provider of this smart contract cannot just kick you out once your business grows too big. So that enables a lot of growth and completely new types of applications. But the reason why we have that composability is only because the infrastructure is truly decentralized, right? Nobody controls it, and therefore nobody can hinder you of accessing certain types of applications. It's like if Facebook was decentralized, to go back to this example before of the Candy Crush saga, right? If Facebook was decentralized, nobody could have kicked off, these games from the Facebook platform. Now, the very base layer, the blockchain itself, Ethereum, is already pretty decentralized. But what we have seen is that, to build a dApp or an application, you need a lot more infrastructure. You need dev tools to, spin up smart contracts. You need to test them. Then you need some scalability solution. You need a wallet to interact with the blockchain as an end user. Then you need RPC clients, which do the technical part of actually connecting to a blockchain, and so on and so forth. So there's a ton of infrastructure which sits in the tech stack above of that layer one. And in the past 4 years, we've built that out mostly for Ethereum. There is a lot there. But for good reasons, this has been done, as quickly as possible, as dirty as possible, which means not decentralized. And it makes sense, right? 4 years ago, you didn't really know if Ethereum was going to have any traction. Like, were there really going to be users? And the type of technology available was also different. Now that has changed, right? We have the proof that blockchains are being used for interesting use cases, and also the scalability has improved a lot. And also we have adjacent new technologies that are being used widely. For example, the CK technologies, which are used for the rollups, right? That Jan talked about before. And we see a new wave of entrepreneurs leveraging all of that to rebuild the stack, the layers of the stack above the layer one in a more decentralized fashion. And we believe this is very important to keep the composability enabled of blockchains. And because this is like what fundamentally creates the value of blockchains, there is also tremendous value, like monetary value in doing that, and therefore those are great investment cases, right? So if you speak about value drivers, right, it's essentially the value driver number one is composability. It's the network effect. If you are a developer, which type of tooling do you use? Do you use the more decentralized one or the more centralized one? We believe you will always use the more decentralized one as long as it's somewhat feature parity, because you can rely more on the decentralized one, that it will serve you reliably, right? Yeah. And so that's this in a nutshell.
I'm just trying to because the decentralized nature, I've always thought, well, it is a bit of a social experiment, right? Because so far we've always seen centralization happen in every single industry, in every single almost part of human history, and now we have blockchain that, assuming that you can, or not assuming, but building on the point that you can build in some checks and balances from the get-go, you can make sure that you because people rationally opt for the version that will be more decentralized to protect yourself in the future. That's what people will opt for, but that only goes as long as this is really what I would maybe call you know, where that logical rational thinking of the developers beats out the distribution power of a centralized player, as an example. Could you talk to me a bit about why the Web2 centralization dogma won't happen in the Web3 space?
Yes.
I think it.
I'm finally excited.
Denis.
No, Andreas, I don't think you were doing this intentionally, but you were basically giving us the great opportunity to pitch one of our portfolio companies. Like,
yes,
this
please,
is
please do, Dennis. I'll highlight you on the screen. Please go.
I don't know if that was your intention. No, but let me quickly first, let me ask you if you're like, to what extent have you been exploring and playing around with these Web3 protocols?
Not at all.
Okay. So basically, but if you were to, you basically usually have the option to go, let's say, full decentralized on the spectrum and be very non-custodial, which means you just keep your private keys, right? That's these things that you're not supposed to share with anyone. At the same time, you're not supposed to lose them, which makes it quite tricky, like balancing both at the same time. That's why many people opt for the centralized solution, which is just like you have a company that's managing them for you, which comes with a few risks. That's, I think, one of the, but yeah, it gives you more usability, better usability. That's one of those centralizing factors that you mentioned. And one company that tries to avoid that or give users better usability while keeping the decentralized nature alive is Capsule, which we co-invested with A16Z, A16Z Crypto, which we're very excited about. What they do is they're basically the developer infrastructure for managing private keys or private key shares that allow one centralized party which is them, to host and manage that one key share, but the other two key shares are with you. They use like fancy math, threshold cryptography, multi-party computation to then derive your private key using the one that they manage and two that you have, while you only need two of these three. And we believe that what they are doing, what they are building, is essential infrastructure for keeping the network decentralized.
Yeah. And when we talk about infrastructure,
so maybe to add here, right? This is like a simple example where if I am a developer, so let's say I build a wallet, right? So far, I had the choice of managing, like using cryptography libraries essentially to create these private public key shares or keys or without shares myself, or like the app would build that. And then you, Andreas, would have to custody these backups and these random words and these strange numbers and so on. Okay, that's how this was happening so far. That is somewhat centralized in the sense that like you are the single point of failure, and it's not like great for me as an app developer. And now with Capsule, I can integrate that, and then some magic is happening cryptographically. It seems more centralized, right? Because now I use this provider, but actually this provider has done it in a decentralized way. You don't need to note down any words anymore. You can sign in with Google. Like the recovery mechanism that Google has developed over 5-10 years works here too. So the user experience is better, but actually like it brings more decentralization. And so I would always choose that as a developer. But if you say, the more fundamental, like the initial question you asked is, this is kind of strange. Like now we have this new decentralized world, and suddenly you tell us like the world will forever be decentralized. Like, do I really believe this? Like, that's a bit what I heard. And I think short term, yes. So what Denis told you, what I just said, that applies short to midterm, over the next few years. And we think this composability, to keep this whole ecosystem as open as possible for as long as possible, it is very important to invest in these kind of technologies. But like we have seen with the web, which, over 10 to 20 years became more centralized, we believe that ultimately we will see the same thing here. And, in 20 years, very early is probably not investing in crypto anymore, but like in the next interesting technology development. And, for example, regulation starts to bring more centralization in the space. The tech can be as decentralized as possible, but if the regulator tells you you need to do KYC to access a wallet and you need to do reporting, this and that, like it creates more points of failure. And over the long term, probably this will be less decentralized as it is right now. But for us, the important thing is to keep it open as long as possible so that more experimentation can happen and more interesting, startups can be built.
And of course, we spoke about this in the beginning, the adoption from the Web2 players into Web3. I'm curious because the whole premise of a Web2 player has been to centralize things, right, and become the gatekeeper to almost anything that goes on in their platform. How do you see it going forward for these larger companies? Will they be building from the ground up when it comes to Web3, or will they be building on top of their existing platforms that they then own? Do you get what I'm getting at? So Facebook, as an example, when they're starting or when they're working in Web3, do they build in Web3 mechanics that bolster their current domination in Web2 world? Or do they build from the ground up and say, well, we're probably going to try and see if we can build the new social media, but on Web3 terms? Do you get my question? I know it's maybe a bit fluffy. Jan is nodding, so I'll let the one person who understands what I'm trying to get at try.
I think I got the gist of the question. So I think they will certainly some of them will attempt to, like re-centralize and have like their own solutions and so on. So we've already seen it like in the last cycle. This was especially popular, so-called kind of corporate or permissioned blockchains. However, at least until now, like none of these really took off. And that is because they don't have, like, it's basically at that point a slow database, right? Because if it's controlled by a single party, it loses all the properties that make a blockchain interesting in the first place, which are like the fact that it's open, anybody can just come in and participate, anybody can fork it, which means copy the code or build on top of it. And so that's why so far, like these approaches to try to of corporations to create their own versions that they're in control of haven't really worked. So we see, for example, Reddit, they launched like their avatar collection as NFTs. And these have been NFTs on Polygon, which is like a layer 2 on Ethereum. But basically that is public open blockchain infrastructure. And there's over 2 million users now, Reddit users, that use these Polygon NFTs. And that has worked quite well for them. So I think people will learn from these examples and use more and more the kind of public permissionless infrastructure that is Web3.
Yeah, interesting. Dennis, were you about to say something, or can I switch to the next next part of your thesis?
I would quickly add one thing where I'm basically saying I don't know what Facebook or the likes will do given these like the choices they will have. I do, however, think that what used to be an asset or like the control over the system that they have at some point does become a liability for them. Just like managing the let's say the content, which Facebook, for instance, didn't want to do for a long time. Now maybe they have to do. They might have to add all these weird labels about where the content comes from and what disclaimers they are to add. And I believe that right now they would rather not have to do that, but they are able to do that and thus have to do that. And in the less permissioned or more permissionless projects, that would be not necessarily possible, and as such Facebook would not have to
because then you can argue that no one owns it, and for that reason you can't then come and say to Facebook, exactly, you need to monitor everything that goes on in Senegal because it's not our platform. And that's probably one of the biggest headaches headed towards Facebook. So that's
one final comment here to add. Now we talked again from the end user perspective, right? As a user of Facebook or Google or so, that sees these shiny applications and so on. If you look at some of the bigger business, like for example the cloud, where Google is still growing quite fastly. Also, Azure and Amazon have similar initiatives. They focus a lot on servicing blockchain companies with blockchain-specific infrastructure. So, for example, Google has the Google Web3 cloud team. They index data on the blockchain. They run nodes, etc., etc. So basically, they do the same as AWS and Google Cloud does, just for blockchain-specific apps. And there they can run the same business model, the same technology, etc., just optimized for applications on the blockchain. So they are for sure like believers in this space. And I think they will be successful in these areas where they don't have to change their business model. But if they just, move an application like LinkedIn or something onto the blockchain and add a token, I don't think that this is gonna work.
Incredibly interesting. So now let's shift to real world impact. Jan, will you lead us through this one? Tell us exactly, as you pointed out last time, Matthew, why is this important? I guess most of us can figure out why real world impact is important, but also your thesis within it and the value drivers that will be determinants in this space.
Yeah, so I think as we've talked before about these cycles, so in this what we're building now and going into the the next cycle, I think we need to cross that chasm from like this Web3 as its own little bubble into the larger population and mass markets of different kinds. And that's one way of thinking about real world impact, right? So the example I gave before with the Reddit avatars and using NFTs as that's one good example. And I think we'll see much more of that. Another example are these tokenization of real world assets. So bringing different kind of assets that are that are right now in traditional markets already widely used, whether it's stocks or bonds and even potentially real estate, although this one might take another cycle. It's the most complicated legally. But certainly bonds, debt of different kinds, and also there's a lot of activity around carbon markets of tokenizing carbon offsets, for instance. So these are some examples of what we call real world impact. And in general, we're very interested in looking at the infrastructure that enables these real world applications. So they kind of go together to some degree, these two theses.
So am I right in saying that here for you again, it's about the infrastructure that enables it rather than it's the application layer? That's the interesting part. Am I right in saying that?
To some degree, yeah. So we prefer investments where no matter which application will turn out to be big, like we have a stake in it because we're kind of funding the pipes and the rails and so on where it will build on top of. So yeah, I think that's true.
Yeah, and we just got a question from the audience. I'll pull it up here. It is, does this theme include also blockchain applications in real-world supply chains?
I think this one also is a bit tricky. I think eventually it would be amazing to have like the kind of first a global ledger for supply chains and then the transparency kind of end to end through the entire manufacturing and consumption process and so on, and even recycling. The problem there is the link to the kind of physical world, right? So there would need to be some sort of tag that can establish that link to the blockchain. And then continuously people would need to attest, like say the truth that certain things have, like really come from this source or that really in that state and so on. So that's what is called like the Oracle problem in Web3. So I think it's challenging technically. So that's why, similar to real estate, it might take a bit longer. But in the very long run, yeah, I'd say this is also a very exciting use case.
Cool. So I want to ask you a question, and I think you're all my age. So that means your friends are not all out there trading NFTs or being high schoolers that trade NFTs and they're buying NFT shoes instead of real shoes. I'm curious to ask you the question, is because that's a real world application, right? But it's the one that most people have also readily pointed fingers at and said, what the fuck is going on? These kids are buying stuff on the internet that they could have just downloaded the JPEG and then said they owned that. So what's going on in that space? Could you try and explain to us how your view is on that type of NFT? And I might be super derogatory here and not understand the bigger picture, but then school me.
No, it's a fair question, and I think you could say the same of like traditional fine art. Like, why would you pay millions for this original Picasso where you can just buy a print of it for like $10 at the like museum store? Like why would you do that? And I think the answer is, well, because it's also to some degree, it's about the ownership, and if you can prove if you buy a real Picasso, you'll have like a certificate of ownership that says like, yes, this was authenticated by this and this gallery. Like here you can see kind of the audit of where, the previous buyers and so on. And then it becomes a financial asset too, right? It's like on one hand, it has like a social status implication of being like similar to wearing a Rolex or like driving a Lamborghini, right? Where you can kind of flash your wealth around. And it is a financial asset in of itself. So you can hopefully sell that Picasso later on for more. So I think here it's the same reasons, right? If you can, and instead of the certificate of ownership and authenticity, the NFT is the kind of non-fungible token provides that. And so anybody can go check, is this a real Bored Ape, these silly monkeys, is it a real one or not, right? And whether it's the specific, we don't have a strong opinion of, the apes or the punks or whatever, but just the infrastructure of being able to prove ownership and authenticity, that's like the big change. And then the reasons for owning these status objects are the same as, Lamborghinis and Rolexes and Picassos.
Yeah. And
Andreas, I don't know if you noticed, or the audience in general, but I just want to highlight how this question was answered by the youngest member of Very Early.
Yes, but it requires a nimble mind to, and also I think that's also why Web3 attracts many dissenters, right? Because it requires a cynical mind to say that anything that is connected to let's call it socially constructed value is completely ridiculous, and we should all just accept that. And once you've accepted that premise, there's no reason why a stupid monkey that you can own on the internet wouldn't be just as cool in 20 or 30 or 50 or 100 years as owning a real money. Both things are completely ridiculous. So if anyone in our audience are owning a real money, I just called you completely ridiculous. Don't take that offensive comment. Invest with me nonetheless. Nadia is asking us a great question that I will pull up while I read, because she's using big words, so that means I need to read it out loud. Fractionalizing ownership of assets such as Picasso and or real estate also complicates certain matters. What risks do you see in this world of tokenizing assets?
So I think the biggest one is actually, and Denis, I'll let you go in a bit, sorry, is a legal one, right? So I think in many jurisdictions, once you start fractionalizing, like the Picasso or even like the Bored Ape, right? It's like the argument of people having like a use value from owning it, of like the aesthetics, or using it as a profile picture, hanging it in your house. That is kind of hard to argue about if you only own like a tiny little piece. And then therefore in many jurisdictions, they argue that, well, now this is actually security, because the only reason to own a fraction of it will be as an investment. And now there's additional kind of requirements, maybe it's only available to accredited investors or certain classes. There's other just restrictions and regulation around it, which isn't necessarily a problem in and of itself, but it just makes it a much more complicated. And if people don't honor these regulations, they might get in trouble with the respective regulators.
Yeah, I have nothing to add there other than hi, Nadia. It's the securities point. Maybe just mention European regulation, MiCA, basically some type of framework that governs or makes recommendations about whether NFTs are securities. And basically there, one important factor is the amount of NFTs of the collection, and then, as Jan alluded to, the point of fractionalizing, which might destroy this property of not being a security. So right now for us, that's probably unfortunately maybe the most important point there.
And then let me ask another question on the point about whether things are security or whatever they are, and it's very much a real world asset, right? That is an investment into a venture fund. In Denmark, we just had a court ruling that said that anyone who had made money selling NFTs will now be slapped with, I think it's a 50 or 60% tax. Completely, outrageous, especially if you hadn't expected that. So I'd love to ask you guys the question: how does that impact people? Rulings like that we keep having in Europe. because we don't know yet, right, in the different ecosystems, and that one might be just overruled by the next court, right, because it's definitely going to be be fought. So my question is to you guys, people investing into a venture fund like yours that are investing in this space, will they be taxed like a if you did any venture fund, or will it be taxed differently? And it might be a very difficult question for you to answer, but I think that many people have been thinking about this type of thing.
So our fund is structured as a Cayman fund, which means it is tax transparent, and every investor will be taxed wherever they are living or paying their usual taxes. So it all depends on your local jurisdiction. And obviously, like, I'm not a tax lawyer, and I don't know how all the different jurisdictions react to these different things. What we do with very early is we don't do yield farming, we don't buy single NFTs. So we suspect that basically what we are creating here is traditional capital gains, just like if you invested in a traditional venture fund, and so that it should be taxed accordingly.
Yeah, and that's also my understanding in most jurisdictions that it would look like. So yeah, but I just wanted to address that because it was to the classification of what are assets, and we're looking at the most concrete asset for many of us, which is a VC fund investment. I would rush very quickly to public markets because I have another topic that I do want to cover as well, but I just want to ask you, Dennis, could you add a few words to public markets opportunity and why this is relevant? And to everyone hearing, would I wish we had heard more about that. We had more time on our podcast and we have already done the recording, so that will come out soon with the team from very early. So you can also listen to it there to get much more in depth on this part. But
Perfect.
Dennis, take us away.
Yeah, we mentioned this is a bit of a special market. The first 2 points were more on the private side, regular investments in companies, in equity, in future tokens, whatever. There, our value add is our the connection to companies and the deal flow we bring in, the deal sourcing. On this side, it's more about public markets. By definition, they're accessible theoretically to anyone, but it's more about filtering out what is valuable, what is less valuable, and what is overpriced or underpriced. Here as well, we have a bit of a barbell strategy. There might be actual real-world applications that we invest in. There might be more of infrastructure plays. And as we mentioned, these assets are a bit more reflexive, means they tend to go up a lot more and down a lot more than they should, which we think is a great opportunity. And also they have traction. They're on these blockchains. The data is public. We can look into the data and the traction and derive investment decisions based on that. And we think we can bring extra value by leveraging that as well. That's it briefly, because as you mentioned, private, public, that's one thing, but we also like to add a little more about our value add and our deal sourcing and our community building, which is part of our where we get our.
And I think we should bring in especially the community building part, because this is back to where we started with being crypto native. That is actually an important part, because being crypto native means you're part of the community. So also being community builders is exactly something we should touch on. Mathieu, I don't know if you want to start us off here and tell us why is it that community building is so important to you guys?
Yeah, so I think there are two reasons. I mean, one is strictly self-beneficial, right? We want to see the best deals and invest in the best companies, and for that, having a great network and, talking to founders even before they know that they will be founders at some point is very important. And for that, building communities is great. On the other hand, it's also a bit altruistic. We want to support people. We were each very lucky to jump into this ecosystem by some random coincidence, and we want to help other people have the same moments and get connected. We also want to, build Zurich as a hub for Web3. And so those are the reasons why we do that. What we are exactly doing, we've already talked about our investor base, right, which are mostly crypto founders, which we bring together. Obviously, we have events, etc., for our investors and connect them among each other, as well as with our portfolio companies. And then we run events in Zurich. So we have co-founded the Club 3, which is a monthly technical meetup series. The next one will be on April 12th. So if anybody is here, please join us. You can find it on the meetup page. Just search for Club 3. We will have the founders of CK Sync and Polygon, CK EVM live there, and also somebody from Starknet, the lead DevRel. So, those are companies which are valued several $1 billion, and only one of them is based in Switzerland, and we are able to attract these kind of people to come and speak up at meetups in Zurich. So I think that's really cool. We've also had founders of Liquidity or Gelato, and we will have the founder of Epicenter podcast and of course one there. So it's a really top-notch meetup series. And then we've helped organizing the Ethereum conference in Zurich, which is happening in mid-April, 14 to 16. So those are the activities we have here. Denis also runs ecosystem activities in Bosnia. Maybe you can say a few words there.
Yeah, I mentioned that I only moved to Switzerland. Before living in Switzerland, I actually lived in Germany. Originally, I'm from the Balkans. I was born in Bosnia. And to give a little back to that community, we're running a scholarship where we're basically paying students in Bosnia and Serbia a monthly scholarship. It's like a bit of a learn-to-earn model. So they are graduates, regular Web2 developers, and we're pushing them into Web3 and making them like valuable to our portfolio companies.
Yeah, really cool. So everyone, let me just wrap this up for you. I will be sending out an email to all of you as well following our event today, likely not today, but probably tomorrow. So you've got some Easter reading where we will also enclose the video so that you can go back and rewatch something. And also, if not all the slides, then selections of it. And of course, these past slides that we don't manage to go too much through, I'll also try and feature to the extent that I can on that article so that you can dive into it. Now I'll kill our presentation and say to Mathieu, Jan, and Denis, thanks a million for joining us for this podcast. I was about to say for this live stream where we got to discuss a bit about how to invest in Web3 in 23. I am quite excited about everything you're building, and I invite anyone who have been equally inspired by this to reach out, because I'm more than happy to help you get in contact with Mathieu, Jan, and Denis. And I just cannot overstate the thankfulness and gratitude that I have to you guys for helping me understand the beautiful space of Web3.
Thank you, Andreas, as well.
Thank you, guys.